Hey everybody, your buddies Djinn and Wolfie. How the hell are you? Today we are talking about stop hunting. We're going to look at a couple of videos, figure out why it happens and how you can avoid getting stop hunted yourself, and look at where you should be putting your entries. Where is the ideal spot? How do the banks, how does the big money look at basically your orders? How do they look at the chart? So we're going to go into that, and hopefully by the end of this, a lot of you will no longer get stop hunted, or at least have it happen to you a whole lot less. Let's go ahead and get it. Wolfie?
All right, sounds good. Let's get in there. Okay, so let's take a look at finding good entries and also understanding why stop hunts are happening. Obviously, stop hunts are pretty easy to understand why. It is someone that wants to fill up their book, and that's the banks and or hedge funds. Retailers won't be able to drive a stop hunt, so it's basically the bank and the hedge funds. And you can recognize them by usually a drive up over a previous high or down to a previous low with a short spike down below just to take out stop losses. So the orange boxes you see on my screen, they represent Asia. And there's a good belief in what Asia does and contrarian trading. And that basically means that Asia usually trades opposite to what New York and London does. So New York and London, London being green, New York blue, traded down the day before, so yesterday, and Asia traded up. That usually holds through. We see New York trading down a little bit, and then Asia trading up. But what happens with that is also that the banks in the morning, London time and New York time, are trying to take out the stops above or below. So if Asia traded up, they'll continue driving the price up in order to get the retail traders on board. And basically what you do as a retail trader, you will set your stop losses below the low and you work your way up, and surely enough the price came down to take out the stop losses. So for swing traders that can sit a whole day here, they're out here unless they cut and reverse over here. But most traders, this is how you get stuck in trades. So how do you find these entries? Well, the easiest is usually start on 1 hour. That's where the banks are trading, 1 hour and 4 hours. But most of the time it's 1 hour. And just look at recent highs or recent lows. So we have a high here that I believe eventually will be taken out. When? That's a good question, but this was Asia trading up, so I expect London to trade down, take out stop losses that are sitting below Asia low. So for now, I think pound yen will drop down, and it will drop down to this area below this low, and down here. Here's where price turned before, so this is where I start looking for a new entry. I will switch over to pound USD. This is 4 hours. We're going to go down to 1 hour. I'm going to zoom in. So recent high is up here, so reasonable to believe that it'll come back up here, but Asia low is down here. The price, as we talked about trend, when the trend ends and the trend changes, and it has here, because a new trend, an uptrend doesn't make new lower lows and lower highs, and so the trend is down. So we'll believe the price will come down here. There could be some hesitation down here, but definitely it will come down here. And where I will be looking is at this area. It doesn't mean anything that price came down here. It just means that could potentially be a reversal here. But you also, when it comes to any USD pairs, you should learn how to trade DXY, or at least look at DXY. So it breaks down here. I believe the area of interest will be down here, 35.90, and there we could potentially see a reversal up to Asia low before we have a further drop down, potentially. But those are the areas where I would be looking for entry. So they'll take out stop losses here. Once we take out the stop losses here, the most recent high is up here, so we could see New York session come back up here, and the dollar is still not very strong, so it'd be reasonable to believe that these stop losses down here will be taken out. These ones are already being taken out, and then we'll be around up here. So that's where I would be looking at these areas, right around here and right around here, which coincide with these areas. Wicks are usually a good area to understand where action happens and where liquidity sits, meaning stop losses and stuff like that, so better pricing for banks. And when you get down to 15 minutes and you take a look at how this looks like, we see a run up, we see the trend changes, we have a lower low, and we have a lower high, I mean. As we talked in a previous video, you could have been in here and taken a sweet 27 pips, and then the trend changed. You had a lower low here, but and you had a lower high, so this one wouldn't be the qualifying candle. This one would be the one that changed the trend. So you'd be in here and you scalp for 10 pips. So there's a stop loss sitting down here because the trend changed and people got in here, so that it's moving up. This candle here is now taking out these stop losses. Also, if you believe in M patterns and W patterns, they do repeat, so there is some validity to it. This is an M, and how long will the M go? Well, it will go the length of the first leg usually. So, and that's from the break of the M. So, if we look at this, we'll come down into this area for this M formation, which would coincide with the stop loss hunt over here. So all makes sense, right? When you know what to look for, it's easy. Now we have this high and this high, and we have this low. So when it retraces up, if the trend retraces up to here, it's possible that you will find an entry over here for another short if you missed the first short. But again, you have to look for the trend direction and the trend change, and you can keep going down to 5 minutes and keep an eye on it. When you get into these areas, price will retrace up to here, and then if you see the right candle where the trend again changes and you get a downtrend again, then you can go in and you can scalp down here. This is obviously an area now that it has to break through. And you look left, I have a line here, you look left, came down here, took out the stop losses here and here. So a retracement now is expected, and so that's what we would be looking for. Throughout the day, I believe the price will come down here to take out the Asian low, and the stop hunts that are sitting, the stop loss is sitting down here for the swing traders. And this just keeps repeating, so it's very easy. If you follow our videos, you know not to use indicators. You know how to see when a trend changes without using indicators. And now this explains the stop loss hunts and where these areas exist and where you should be looking at getting in. So you can keep digging into this 1 hour, from 1 hour, and work your way down to 1 minute if you want to become a scalper. We see here we had a down move, we have a higher low but not a higher high, but here we have a higher low and a higher high, so the change is here. Where we're going to meet the first resistance, over here. That's just because over here, right over here, sets stop losses for the one that went short, right? So the ones that went short here got 12 pips, but they have the stop losses over here. Guess where this one is going to go? It's going to go right up in here. And then you'll look, is this the area where it reverses? We are very close to this area, right? So we could continue down. But again, we go back out to 5 minute. We have a high over here that eventually will be taken out. We have a high over here that will eventually be taken out, and so on. And then we have the high, big high over here on 1 hour. So just look for these highs and lows swing low, swing high. These areas are of interest because those are the things that everyone been told. That's where you put your stop loss. When you see a swing high, you put your stop loss right here and then you go short. Okay, thank you for letting me know that you're going to follow that. Let me go after that so I can take you out. And then the worst part is when your stop loss gets taken out, you always see the price go back in the same direction that you were in. But you're out now because the bank took out your stop loss or the hedge fund took out your stop loss. They have these programs that know these levels, know how to look for them, and just drives the price there. So look for these swing lows, swing highs. They will be chased and they will be taken out, and that's where you want to get in. So you want to start thinking like that. Yeah, I had a swing high here. Okay, price will come up here at some point. You will see when it does. I had a swing low, swing low. These stop losses are out, so whoever went long here, if they didn't capture it or walked away or did something, they're out with a loss. And the same with these. So doesn't get harder than that.
Hey everyone, how the hell is you? Your buddy Djinn. Okay, so quick disclaimer. I'm just going to be making up some numbers here. I'm just trying to paint a picture. I'm not saying this is exactly the mentality or what's going on in the bank, their playbook. I'm saying this is a way to look at it, and it will become pretty clear, and you'll have a good idea of where you should be putting your entry. Okay, so let's say you work for one of the big banks. Your boss comes up to you, says, we need 1,000 lots below this price. Okay, and we expect it to go up, but in order to make the money, we need 1,000 lots. For how much we expect it to go up. We need it all below this price. Guess what? There's only 100 lots right here. There's 50 lots right here. There's 50 lots right here. So you pick up that 100. You pick up that 50 that's right there. You pick up that 50 there. Now what do? You still need another 200 lots, but guess what? The next supply of people willing to sell to you is way up here above that line, where your profit line. What are you going to do? Easy. You're going to pick up another 50 lots, but guess what? There's no one there to do it. So it's going to go up to meet the next batch of people that are willing to sell to you. And what do all of you traders see? You see the MACD cross. You see it go above the signal line. You see the CCI, the moving averages, the resistance getting broke. You see everything your website told you to see. Okay. You see the standard zigzag patterns, higher highs, higher lows. Oh my God, it's going up. I got to get in. I'm going to miss out. Or Wolfie says fear of missing out. The FOMO, it takes over. They get emotional. And them and you are good little sheep. Retail traders. I always mean to say retail traders. You're not. You are. But that's not the point. You're going to do exactly what you're told to do. That's why you're the sheep. You don't like that? Well, here you go. Here's a way to change it. You're going to put your stop right here because you were told to put your stop. You're going to put your stop somewhere in here. Maybe some of you will put it here, some of you will put it here, but somewhere between here and here is where you're going to put your stop because that's what you were told to do. So now let's say 800, 900 lots worth of buyers got in because they're emotional. They saw it going up. They're like, oh, I'm going to miss out. I'm not going to make any money. And they get in. And they put their stops. Now, but they've spent all their money, or at least the good chunk of it, getting in long. If you come in and try to pick up 100 lots short, you as the bank trader, you try to push it down, guess what? There's no one there left to buy. They've already blown their load. They've spent their money. They cannot fight you. And down it goes. Maybe a few people try to. Maybe they have a few dollars left, but they can't. In the end, they end up losing. Price goes down to where there's a big pool of people willing to sell at this price. Who's willing to sell it? Oh, yeah. All of the traders that got in here and did the responsible thing, put their stop loss exactly where they were told to. Because if you bought, how do you get out of it? You have to sell. That's how you close a trade. And there is now you have magically created 800 lots worth of buyers. Goes up, same thing happens over the course of the week. Everyone's like, oh, it's going up, I'm going to get in here at support. I'm going to get in here. And where does it go? It goes right back down into that profit line. where they needed to get in. And by the end of the week, Friday or Monday, next Monday comes along, you have got the whole 1,000, maybe even 1,100 lot at or below. In fact, you got most of it below the price you were supposed to. The boss comes over, pats you on the back, gives you the key to the company retreat, writes you a big fat bonus check, says, "Oh, by the way, here, meet my daughter, Ditzy McFab Tits," and you're golden. Okay, why do they do this? Well, it's the only way they can fill their orders. If they just try to pick up the lots, the position size all at once, price is going to shoot up and they're not going to get the price they need. This is how they do it. And you may say, well, Djinn, they lost money here. Yeah, they lost money pushing it down. Maybe they hit some stops or something. Maybe they were able to sell some of it, and they probably were able to sell a lot of it. But even if they, lost 10% of their bank, what they had to go with, by the time it cruises up, you know, they've made so much that this is just now a cost of business. No different than if one of the burger shops has to buy buns and burgers and lettuce and tomato and all that kind of stuff. They know at the end of the day when they sell that burger, they're going to make enough profit to cover it, make up the loss. So um, in closing, where is your stop? When you see a signal, where's your stop? No, that's your fucking entry. Don't make it easier for them. Basically what you're doing right now when you're following technical analysis, and I don't know who came up with technical analysis. I know it came up from a lot of different places, but man, it seems so tailored for the market makers. I mean, you might as well just pull the National Lampoon's thing, just walk up to the bank and say, hey, I'm gonna try to outsmart you, and the guy's just gonna like, tell you what, let's go out back. You hand me half of your money, I'll kick you in the nuts, and we'll call it a day. Okay, that's basically what you're doing with technical analysis. Learn how the banks trade. Learn not that they're doing this out of spite or because they're mean, evil corporations or anything. This is how they have to do it. Learn how they have to do it. Why should you learn how they have to do it? Because they're the only ones with the money to actually make it move. So you should figure out kind of where they're getting in and what they're trying to do. Okay, we're at 6 minutes. I got under 7. I was shooting for under 7. There you go. Hope that helps. And I know a lot of these numbers and all this stuff's kind of BS, but again, I just wanted to paint a picture. Now you can go look at your charts and see how basically how we do it, at least a very basic way of you'll have an idea of where we're looking at, and how Wolfie and myself became stop hunters. So there you go. Hope that helps. Get paid. I dig you. Bye bye.
All right, guys. So as you can see, um, I think Djinn says it best, and that is where you plan to put your stop loss is where you probably should be entering in. Um, and it's not very difficult to see these areas. As you can see on the screen, hunt zones, identifying trade zones and safe time frames for trading and enter stop and take profit. All those things are easy to spot and understand now with those videos. Again, I think those videos are very self-explanatory. Just start looking at the screen and start removing all those indicators if you have them. They won't help you, really, because the information is there, as we always keep saying. So I don't think we have anything else next week. We were thinking about, and I keep saying next week, and then it takes 2 weeks to make a fucking video, but whatever. This is obviously not a paid gig. But next week we're thinking we're going to do something about risk management. How do you figure out how many lot sizes or half lot sizes or micro lot sizes you're going to get in with, and where do you put your stop loss, and how do you keep trading when you take hits? I think that should be a pretty good topic. A little bit dry, but if you want to be trading for years and years to come, then it'd be a good topic, I think. Because getting rich overnight is very rare, and usually if you get it overnight, you lose it overnight. So,
Yeah.
so I don't know. You got anything to add there, Djinn?
No, not too much, but yeah, definitely check out that video once we get it done. Because as Wolfie said, it is kind of it's not an exciting, sexy topic, risk management, money management, but it's something you got to know. I mean, it really is what builds your account or what breaks your account. So yeah, definitely, like I say, it won't be the sexiest video we've ever done, but definitely check it out. As far as for this week's video, yeah, stop hunting. Take the time to learn how the banks, how the big money, the people who actually have the ability to move the market, figure out how they have to do it. And then that'll really help you out with your entries. It won't be a surprise, when you start seeing the fluctuations and you get in and it goes against you and you're like, why is this happening when my indicators or whatever, my method said, hey, it's going that way. If you understand accumulation, distribution, how the big money has to position themselves over the course of a week or a month or whatever, it becomes a lot clearer, and you're going to be able to stay in winning trades even when they don't look like winners. So that's all I have to add for that.
All right. So with that, I think we'll just end this video and hope everyone has a good understanding for everything that we taught you guys. It's not that difficult. Have a great week. See you on the flip
See
side.
ya!